I think, that's the thing, is that there's no longer a us and them or one or the other. The market is stronger and customer outcomes are stronger when fintech and heritage banking come together and work together.
Yeah.
And I think we're now seeing a genuine recognition that fintechs can accelerate some of the big bank agenda items or strategic objectives, but also fintechs can use support and help from big banks with large customer bases and really trusted brands in the market.
Yeah.
So we're seeing this nice flow and kind of integration together, so much so that we're now actually seeing equity investment coming from big banks into fintechs and a desire to bring them both together.
So, Nicole, thank you so much for welcoming us here in your offices in London. It's great meeting you.
Yeah, absolutely. A pleasure to have you. Welcome to London. Really looking forward to our chat today, and thank you for having me on.
So are we. So let's just, before we start, tell us a little bit about who you are and what it is that you do.
My name is Nicole Perry and I'm a Global Strategy Director at 11FS. I live in London, but I'm originally from Glasgow in Scotland.
From Glasgow, right? So that's where the accent comes from.
It sure is, yeah.
Which we love it, by the way.
Excellent.
So cool.
Yeah, some raspy Glaswegian to see us through this chat.
Right, yeah. Okay, so tell us a little bit about 11FS. Specifically, we're a Nordic company, so we want to let the audience know what is 11FS, what's its core value proposition, and how does it differentiate itself in the market?
Sure. So 11FS, we exist to change the fabric of financial services, and we were built and kind of act and work on the hypothesis that digital is different from digitised. So we are a global fintech consultancy firm, and we serve all different types of clients, banks, financial institutions, and really helping them on a move from digitised to truly digital. And that can be anything from building a greenfield venture to helping with digital transformation itself to building new products and services. And I sit in our global advisory team where we work with C-suite level individuals, stakeholders and decision makers to make those changes in the bank.
Right, okay, let me double click on that. Digitized versus digital.
Yeah.
How do you distinguish the two?
Yeah, I mean, it's a great question, and two terms that often very much are interchanged, but actually they are fundamentally different. So the way that we think of digitised is that you are essentially taking something that came before and just making it digital. So if we think about kind of Spotify and some of the examples around that, they moved from music being something you would buy in the store. You would like an artist, you would go and buy the product, you would own that product, and that was how music was done. And then obviously now Spotify, it's a commonly used example, but it's one of the best examples of how it truly disrupted that industry, because not only did they bring the experience online, but they actually fundamentally changed the distribution model and the business model around music. Mm-hmm. But when you think about banking, what we've done is take what we used to do in paper, or sort of on paper or with people or ATMs, and move that online. So your statement is now digitised, or you check your balance in your app rather than at the ATM. And actually, we haven't fundamentally gotten to a mass market level of being truly digital yet, where distribution looks different, the business model looks different, and customer experiences are truly different and truly intelligent.
Mm-hmm. Right, and then that brings me to my next question. Just a little bit of context in the Nordics, digital ID is prevalent. It's in all the Nordic contexts, and I know the UK has always had a different take on digital ID, but it's basically used for every single banking and government and state-issued transaction in the Nordics. Now, that's great when it works. I recently had my stolen. I had my authenticator on the phone. I had to cancel it because that's connected to my digital ID. And that just created a chain reaction that basically has locked me out of my bank account for 3 weeks. I still don't have access to it, right?
Wow.
Now, the question I have is, we keep hearing that banking is being disrupted, that transformation is taking over financial services, and yet I think a lot of us still have not experienced any significant improvement in the way in which we are served by banks. I'd like to hear your take on it. Why do you think that might be? Or if you disagree with the statement, please just...
No, of course. I mean, it's a great example because we have seen, a level of innovation and disruption, but it's primarily at the sort of front end of that experience. So we've made huge leaps in discretionary spending, mobile payments, giving customers choice at checkout. But actually, when you think about the end-to-end experience, that's where digital stops. And that's where, again, we talk about the difference between digitised and digital, is that actually, to become truly digital, we need to make sure that every single interaction or event or scenario, just like the one that you've just described, actually is friction-free, and it's an experience that's great all the way through, not just at onboarding or not just at, checking your balance or taking out a new product. So I agree that we're maybe not quite at that level of amazing experience and truly digital experience quite yet, but we've definitely made some leaps and bounds.
Okay. Right, so I guess that as a head of strategy, global director of strategy, you have your finger on the pulse on really what's happening across the globe when it comes to fintech. Is there any trend that particularly excites you?
Oh, I mean, I could have a list as long as my arm about things that are exciting me in the market at the moment. But I think one in particular has to be credit scoring. I think because it's one of these things in the industry that has equal benefit for both the institution and for the customer. So credit scoring in the system is broken, it's outdated. It sees customers as just numbers on a sheet or arbitrary line items in a credit scoring model, when actually as human beings we're so much more than that. We're multicoloured, multifaceted, individuals with different lives and different circumstances, and we deserve to be seen as that. And I think with some of the advances in sort of data modelling and the ability to actually score people on a real idiosyncratic basis is really, really exciting. And for the institution, it drives down cost, takes out inefficiency, and most importantly, manages defaults. And for customers, what it will allow us to do is move to fairer lending, more responsible lending, and actually lending that correlates with good behaviour, which we don't get as customers today. So it's the difference between someone spending £4,000 in something because they're having a baby, or splashing out £4,000 on a weekend in Vegas using credit. And at the moment, we're not necessarily treated differently in those two circumstances. We're just treated on the amount of credit that we take. So I think it's really exciting about how we might be able to move to much more individualistic views on credit and its customers, and massively open up accessibility as well, access to credit. A lot of people think it's a bad thing, to have credit, but actually it's a huge part of kind of building your life and making yourself known as a credible individual to the bank. And some of the fintechs that we're seeing come to the market with some of the propositions and new ways of credit scoring, I think are really, really exciting.
Right. It's very interesting that you mentioned that, because we've been keeping our eyes on how credit worthiness is changing, but it's not something we hear a lot about. We hear about better finance and wealth tech and that sort of things. Let me ask you a follow-up question on credit scoring. We've seen that some countries have taken more drastic measures to score the activities of the citizens and determine how worthy they are, not just for credit, but to a number of services from the state. Do you think that there's a risk that as the credit worthiness models change in the West, we might be getting closer to that assessment of you as an individual, not just for credit, but for other things?
Yeah. I mean, it's definitely on a spectrum. And there's a kind of couple of things to say here. But the first, I would say that, in my opinion, it should always be done with good intent. So we should be rewarded for good behaviour, not punished for bad behaviour. Because a lot of the time, when it comes to credit, bad behaviours are executed because people don't fundamentally understand what they're doing. They're not educated in financial services and credit well enough. Or actually they've maybe just not got the right support or information to make the best decisions in their life when it comes to spending money. So I think if it's done with good intent, yes. And then secondly, it's got to be about choice. So if I want the most individualistic credit scoring model because I believe that the way that I live my life, would result in a positive product experience and a positive credit experience, if I say yes to every single piece of data that's known of me to be used, then I think that's okay. But the important part of that is making sure that customers know and understand what they're fundamentally signing up to when they do say yes.
Right. Okay. Let's go back to what 11FS does.
Sure.
I think you're very well known for the thought leadership and the content that you produce and you put out on various channels. You mentioned at the beginning that you also help clients distinguish between these digitized versus digital. Tell me a little bit more, how do you do that, and who are your clients?
So I would say the majority of our clients are large, very well-established banks around the world that have been battling with legacy and digital transformation for years. And there's been so many attempts to kind of turn the tanker around in terms of these huge organisations having to go digital and making decisions about architecture that's a bit of a spaghetti mess, and it's been built on and over years and years and years, but it's never actually truly been kind of broken down and rebuilt from the beginning. So what we try and do is kind of offer an alternative to the efforts to do digital transformation previously. So instead of trying to transform the whole organisation, we look for opportunities to take thin slices of those organisations and really understand, well, what's the growth opportunity in the market?
Right.
What suits you as an organisation, and how can you help customers? How can you satisfy their jobs to be done? And understanding that landscape, and then using that as the spearhead for digital transformation. So not sort of transforming for the sake of it, but doing it because you have identified outcomes that will be positive for the institution and for the customer.
Right. All right. Let's follow that up with talk a little bit about fintech. I guess this happened in the UK as well as in other European markets, but we've seen changes in the way in which the incumbents have responded to the fintech revolution, as it was called at one point. So where would you put that journey on at the moment? What's the latest of what's happening in the industry? Yeah,
it's a great question, and one that feels like it changes all the time, right? You think you're kind of predicting what's going to come, and then a shock move from one of the providers, big tech or a bank or a fintech, comes in and just changes the whole landscape. So we at 11FS call this the banking battlefield. And it's really trying to look at the question of what will happen first. Will the big banks change before fintechs can scale? And that's really the dynamic that we see playing out in the market, is that there's this massive impetus for change in heritage and incumbent institutions, while fintechs are on this massive desire to scale as fast as possible. And I think you're right, attitudes have certainly changed. There was an element of complacency, some years ago, about fintechs will never make money, they'll never get the right customers. Whereas now I think there's a genuine threat of competition that's felt, but also a genuine desire to want to change the larger organisations, and a recognition that things actually can be done differently. We've seen multiple banks experiment with greenfield builds and digital offshoots, and actually some of those have paid off. You just look at JP Morgan Chase and the success that they're having in the UK, making that big bet and doing it right from the beginning, with the right level of funding, with the right understanding of customers, with the right architecture, ways of working, it can actually be done. So I think the attitudes are changing, and there's more of an openness to doing things differently now. Right.
It's funny how you mentioned that we had Nordic FinTech Week just a few months ago, and one of our guests from BNP Paribas approached me and said, "Chris, there's something really interesting here. We have the fintechs, and they're wearing trainers and wearing hoodies, and we have the suits, and they're talking."
I know.
And it was like, yeah, you're right. Actually, I know. We hadn't seen that before, at least not in Nordic. So
I think that's the thing, is that there's no longer us and them or one or the other. The market is stronger, and customer outcomes are stronger when fintech and heritage banking come together and work together. And I think we're now seeing a genuine recognition that fintechs can accelerate some of the big bank agenda items or strategic objectives, but also fintechs can use support and help from big banks with large customer bases and really trusted brands in the market. So we're seeing this nice flow and kind of integration together, so much so that we're now actually seeing equity investment coming from big banks into fintechs, and a desire to bring them both together.
Right. Okay. Let's talk a little bit about the Nordics now. The Nordics, as you probably heard, is a group of markets that are very hermetically sealed. They're very homogeneous. There's a lot of collaboration between the various markets, things like P27 that enable easy payment and transfer of money between the markets. I think if we compare it to the UK market, especially now that we're a few years into Brexit, where at first we didn't know what would become of London, and we look around here and it's thriving, right?
Yeah.
It's booming, and it's a very, very dynamic financial services market, perhaps much more so than what we see across the Nordics. So, in your opinion, is there anything that the UK is doing particularly well that other fintech ecosystems, fintech including incumbents and startups, could learn from?
Well, I think if we kind of take it back to sort of the birth of the neobank in the UK, that was born out of crisis, right? A financial crash, and again, a desire to do things genuinely differently. And actually welcoming that competition and having it supported by the regulator was such a healthy thing for the market. Because the competition wasn't just against the big banks, it was between fintechs too. And we had this cohort of neobanks that have now grown up and are actually genuinely being taken seriously. Some of them are on path to profit, some of them have actually made profit. So welcoming that competition, encouraging the regulator to be innovative, to work with fintechs and banks, to really get an understanding of how do we solve for customer outcomes better, I think is absolutely key. And the kind of nurturing of talent in the UK, I think we do that really well. Fintech is on the map in terms of university education or practical courses, and we have a really healthy pipeline of young, enthusiastic people coming in, domestically and from overseas. And I think there's just such a buzz here. Yeah. And that a lot of that comes from the success that we've seen from some of the fintechs that we've had. There's so many amazing role models to look up to. And I think, again, the core of that is that stimulus of competition and that desire to just be 1% better every single day, and consistently take inspiration from one another and trying to beat the market. So yeah, I would say embracing competition, encouraging it, working together, collaboration, which I know the Nordics are very good at, for me is key.
Right, and it's interesting that you mentioned that it's not just banks and fintechs, but it's also the universities and the regulator all working.
Yeah, absolutely. It's the whole of that ecosystem, and an ecosystem doesn't function if one part just isn't there. It's very cyclical. It encourages movement. It encourages growth, and I think we've done. The UK government and the regulator again have done a fabulous job of identifying that all of those ecosystem parts need to be strong in order for the ecosystem to be healthy. Right. And they've really employed effort into ensuring that we have, all of that kind of integration and coming together. Right.
Okay. Now, Nicole, tell me a little bit of what's the UK's perception of the Nordic market. How does it seem from over here?
I think that we see the Nordics as being incredibly inspiring, particularly when it comes to sustainable finance and ESG. Living sustainably is such a huge part of culture in the Nordic market, and we're seeing that come to market with some really amazing fintechs that are, genuinely driving brilliant ESG outcomes. And I'm really looking forward to and would encourage Nordic fintechs to think about, well, how can we bring that to the UK market and beyond? Because the sort of customer base in the market is much more open and kind of embedded already with sustainable behaviours, Nordic fintechs have had the opportunity to really test and learn in terms of what products and services work, and what's people's attitude and aptitude for using these, and that provides such a competitive advantage and such a USP for Nordic fintechs that we don't have here, because we're not quite in the mindset yet of being that green transition. Right. So I'd be really interested and would love to see what Nordic fintechs can bring to us here in the UK.
No, that's a fantastic insight. I'm sure the fintechs that follow our media will be very interested to hear about that.
Excellent.
All right. When it comes to investment, so in the investor community, we've seen a slowdown in the amount of money that is being fueled into fintech. In your opinion, what are the implications of this sort of lack of available capital that we see at the moment, and what can be the opportunities as well as a result of what we're seeing?
Yeah, it's a sort of funny one. There's sort of positives and negatives. I mean, it was great to see that influx and inflow of capital, and massive growth and massive opportunity and people being back. That was all really positive, but actually I do question myself now about the kind of impact that had on the decisions that were being made in some of these businesses. When you have a runway of capital to burn and eat up and it's consistently coming, I do question where founders, where businesses as disciplined as they could have been in terms of making growth decisions or sustainable business decisions. And actually with that now drying up, companies are going to get tighter and they're going to have to, maybe grow at a slower pace. But actually that might be what the market needs in order to really establish these new players and make sure that they're here for the long term, not just for a burst of innovation.
Yeah, okay. We've been talking a lot about fintechs, incumbent, traditional banking.
Yeah.
Let's talk a little bit now about the alternative banking that we see emerging with so much impetus. What do you make of all the what we've seen in the crypto space, with its ups and downs, with its scandals, but in the long term, as we start considering value propositions from Web3 companies, from decentralized finance, what's your take on the future of that, and how will it combine itself with traditional finance, heritage finance, as you call it?
So for me, I think regardless of your opinion on or your own personal attitude towards decentralized finance or crypto or Web3, you cannot argue against the fact that the development of an alternative infrastructure, ecosystem, an alternative power dynamic in financial services is a good thing. Because we have been living in the same model with the same institutions and ways of managing money in the same power dynamic for, eternity. And having an alternative is a real positive for people that might want to do things in a different way. So regardless of what your attitude to it is or not, I think it's a really positive thing. Now, obviously it's development of basically a whole new world, and there's going to be ups and downs. And I think we just need to be careful in terms of how we bring people into, DeFi or crypto or Web3, and make sure that they're aware of the circumstances and the risk level that, is at play when we're interacting with such a new ecosystem. So if you look at FTX, everyone's talking about it, right? And the fear that I have about these kind of stories when they hit the news is that normal people will read them and just think that, crypto's bad. When actually there's a lot more education that needs to be done, that Web3 and crypto is not just about volatile currencies or crazy investments in Bitcoin. There's so much more behind it and so much more potential. So I think it's an amazing and inspiring place that we're going. It will take some time to get there. Rome was not built in a day, sort of all part of crypto's rich tapestry, I suppose. And we just need to make sure that we're bringing as many real-life, tangible use cases and talking about them as possible, so that people do understand that it's more than just Bitcoin.
Yep. Okay, and just to close, if we were to make a prediction, what things that we see today, like popping up in terms of trends, would you expect to hit the mainstream in, let's say, 5 years?
That's a very good question. I think we'll certainly see much more adoption of crypto and Web3. Again, it comes back to those kind of use cases, and I think we'll see a merging of traditional finance and decentralized finance, what we like to call a DeFi mullet. So fintech in the front and DeFi in the back.
Yeah.
And I'm really excited to see that, because I think it will really drive adoption, and it will also help the regulator get more comfortable with what's going on.
Yeah.
And then from a kind of wider consumer perspective, more traditional finance perspective, I'm really excited to see the potential of open finance. So the majority of customers really live in the dark when it comes to their finances, and the sort of lucky few, you and I and fintech professionals, finance professionals, we know where to find the right information, we know where to find the right tools to make the right decisions about our money. But a lot of people, they don't have that. They don't know what exists, and they don't know what the potential could be. Whereas actually open finance, if we bring that to consumers and kind of help them make decisions and make them more aware, and at the same time financially educating them in what's available, I think that we would see much, much more positive outcomes for many more mass market customers.
Right. Well, Nicole, thank you so much for taking time to speak to us and for sharing all those insights with us.
You're welcome.
And we are very much looking forward to seeing you in the Nordics,
yes,
hopefully in 2023.
Absolutely. Yeah, can't wait to be back. Thank you so much.
All right, thanks.
Thank you.